Crude oil. What is the effect of crude oil prices on the equity and commodity markets? What is your belief? Are rising crude oil prices detrimental to the equity markets? Do lower crude oil prices aid a bull market? All of us appear to have a fetish to look at the crude oil prices and assume we will be able to forecast the market direction from the trend in crude oil prices. The media also adds to this confusion. Every day, you can read and hear about rising crude oil prices or that crude oil prices have suddenly taken a nosedive, and how this will positively or negatively impact the equity markets. The biggest input in most businesses is logistics and transport and the movement of goods. We believe that higher crude oil prices will negatively impact profitability and will lead to higher inflation, and thus will reflect on the equity markets negatively, and vice versa. Nothing can be further from the truth. In 2000, crude oil was trading at a high of $37, and all equity markets around the globe have been trading higher, perfectly synchronized with crude oil. Then, towards the end of 2003, when crude oil was trading lower at $26, all equity markets were trading lower, again synchronized. Now move ahead 5 more years, and you see a rally of over 500% on crude oil prices, now trading at $147. Lo and behold, inexplicably, the world equity markets are also ruling at the highs. The crash of 2009 once again saw crude oil prices trading at $40, and magically, equity markets also are trading lower. See for yourself the years 2011 and 2015. Strange, isn't it? We believe the exact opposite to be true. Time and time again, markets present these insights to us, and while they appear absolutely illogical, they appear to have a logic of their own. I will elaborate more on this phenomenon later.